industry. And I'm very grateful to have you as such a great friend and always supportive. So anyway, I'd like to take this opportunity to introduce myself, and then we'll start the presentation. So let me share my screen with you all. Oh, sorry, need to, I have some difficulty here again. Just give me 1 second so I can share. Sorry, hold on 1 second. Let me. Got it here. Sorry about that. So can everyone see my screen now?
Angela,
yes.
You need to go back to the screen sharing and then choose the PowerPoint slide.
Okay, so you can see my screen now.
I cannot see your PowerPoint slide right.
Okay, sorry.
To the share screen button, and then you can choose the files that you want to share with us.
Sorry, for some reason, this is, can you see it? Can you see my screen now? Can you see my screen here? Sorry.
Angela, so
yeah.
you need to go back to the share screen and choose the file, because right now we can only see your desktop. We cannot see your PowerPoint presentation. Yeah, just go back and do. Okay.
Yeah.
Got it? Okay. Sorry about that.
No worries.
All right. Okay. So let's see. Here you go. Okay. All right. Thank you so much. I'm sorry for for the technical problem. So let me introduce myself a little bit. I've been in the business actually 28 years. When I did this slide, it was a few months ago, which was 27 years, and now it's already 28 years. So the first 10 years, I've been doing most of my brokerage activities, doing sales of real estate. So since 2003, I started doing small development projects, from one single family house to 2 to 4 units or small multi-family units. So, and then this is, and since then, in 2011, I started doing bigger projects, including like from 34 units to 115 units. Right now, I'm doing majority, my career is in development, but however, I do have a marketing team affiliate with Compass, where we still serve our clients to sell or purchase the properties in San Francisco and Bay Area. And also, luckily, I have the opportunity to extend my business and to Hong Kong, and I'm going to set up a JV company with my partners in Hong Kong, where we will have a brokerage firm to act as a bridge to facilitate both ends of the investors of their real estate needs in Hong Kong as well as San Francisco Bay Area. So hopefully that will be a a good beginning, and also is serve as a bridge between two cultures and between Hong Kong and US. So those are my great sales teams members, Jonathan Ng, Susanna Huang, and Kai Su. So now I think it's about time to start the presentation. I'm going to separate into different counties. So because the Bay Area, we have a total of seven counties. And to start with, I'm going to talk about San Francisco first, and then we'll go San Mateo County, Santa Clara County, and Alameda County. So first of all, San Francisco County. So we have a great boom for the past over 10 years, but I have a great chart to share with you since 1990, which I think maybe some of you guys are not even born yet. So this is from June 1990 to June 2020, which is talking about 30 years of the time. You will see we have different era of recessions and boom. We always have a cycle for in different, about like 5 to 10 years. So I think most people will still remember was the past recession that we had, which was, we call almost a great recession, very close to our 1930s depression, which happened in 2008. Oh, sorry, 2008. So you can see that even though when we were in that recession, so the pricing is still going like a little bit up and down, up and down. It's not like a deep, well, here is a deep drop, but afterwards it start going back up, and then all the way starting from 2011, we start going upward. And even the past 2 years, we can go to the next slide. From 2017 to 2020, medium house price, sales price, sorry, jump, sorry. So the medium house price, you can tell from 1.29, around 1.29 million to right now is 1.7. So you can see even during the pandemic, our average medium house sales price been going up. So this is not a very common scenario during the recession. Same as like in 2008. Since 2008, 2009, 2010, at that time, the market was going down. It's not like now, we are technically in recession, but however, our housing pricing keeps going up. So the next screen I'd like to share with you is condo. So condo is a little different now. So still in a high level, but from February 17, it was just a little bit over $1 million average median price. Now it's 1.25. But at the peak, it was 1.31, which was last year about 9 months ago. And lately, we have been probably hearing that the condo pricing in San Francisco has softened, which is true. So I will explain more in the later slide. So this is I would like to show you the seasonal, every year we have a season, different seasons. Like in January, we'll start picking up, and then normally April, May, June are the 3 months that at the one peak, and then we'll kind of slow down a little bit. And then during the summertime, everybody is going out for vacation. And then there's another peak. There are 2 peaks per year normally. One is in spring, which is April, May, June, before summer. And then the other one is fall, which is September, October, and November. And then there will be a deep slow down during the holiday, which is a very common situation every year. Doesn't matter is during the recession year or is a blooming year. So now you can see 2018-19 are pretty regular and very stable as what it should be. But coming to 2020, it's because of the pandemic, shelter in place. So we're supposed to have a peak rising in April, but because of the shutdown, we kind of the whole thing postponed for 2 months. April and May, they basically had almost no activities at all. But however, once when the market start opening in June, you can see the speed up, going up and up. So which is right now is still going up. So this is the slide that talking about the current market listing. So the lighter blue is condo and the darker blue is house, single family house. So right now, majority of the active listings are dominated by the condos. I think people have right now have a tendency or preference to move out from the city, the urban area, and move to the suburban area with a bigger house or have a front yard or backyard, and or even is kind of try to or move to other state as well. So and then this slide is talking about, I probably you all have heard about like, oh, we were in the beating walls for so long and so forth. And right now we still are seeing that happening in this market, even though we still are going through the pandemic. Multiple offers are still seen in some of the areas, especially single family house. For condo, you can see here is almost like flat, like whatever you're asking, you will get the price, but not like before. It will have some over asking offers coming in. But single family house, yes, is people are still like to pay more than the asking price. But however, the trend seems like is coming down as well. So here is the median pricing for the condo market, from studio, 1 bedroom to 2 bedrooms, 3 bedrooms. You can see the pricing from 2005 to all the way to 2020. So you can see right here, the smaller the units, they are a little bit more stable on the pricing. It's not going down too much, but it's not going up a lot as well. So it's pretty stable, but for 3 bedrooms, you can see it's more volatile. It's from like the lowest is probably like a little bit over 800,000 up to over 1.8 million within 10 years. So it jumped over 100%. So now talking about single family house. 2 bedrooms, 3 bedroom, and 4 bedroom houses. Their median price, you can see the same thing. The smaller the house, the size of the house, the fluctuation is less than the bigger house. So, but however, the bigger house jumped a lot more as well. So this one is like the 4 bedroom plus. Not talking about like maybe in Pacific Heights area or Marina, Cow Hollow, those areas. You can see the pricing from 1.1 million all the way now is over 2.3 million. So here is another chart I'd like to share with you is during the pandemic, this few months on what's going on. When you see, when we start like March 1st, we start our shelter in place on March 16th. And then we have different order and back and forth. And then, but the pricing you can see is nonstop going up. So this is a very different scenario of a recession, because the past experience that we have or past record we have, all the recessions, every time when we get into a recession, the house the pricing goes down as well. However, this time is different. So we'll explain why this scenario is happening like this, and hopefully that what will be the trend coming up. So now this is a more analysis to the just past few months during our pandemic time. So you can, this is the single family house median price. You can see they are very stable, except that May and April, as I said, those 2 months, they are very quiet and activities are were very slow. And the reason why is because those 2 months, if we had any closing of escrows, those were in escrow like around March or April. So when the market starts opening up, allow the showings, allow a little bit more business activities happening in the city. So you can see the price kind of keep pretty steady, if not going up, but is at least back to the pre-pandemic level. So this is the house, single house market. So here is the condo. So, oh, sorry, I misspoke. This is the condo, and the coming up is the single family house. So you can see the single family house, the same trend that we have the very stable pricing throughout this 3 months of pandemic, not 3 months, 5 months, sorry. So of the pandemic, and we haven't seen anything that have any negative impact on the housing market yet. So this is the percentage under contract during the pandemic. So this is the condo market, and the pre-pandemic was pretty normal at 6.8%, and it went down during the when the shelter in place started, and then go back and up, and now we are actually above the pre-pandemic level, that the percentage under contract, which is a very good sign. And this is the single family house. So sorry, this is the absorption, and this is the number of units in escrow. So you can see it's actually we have more in escrow than pre-pandemic level. Again, is a good sign. So this one is the this is the sorry, for sale right now on the market. So now this is end of the San Francisco County. So we'd like to move on to the San Mateo County and see what's going on our neighboring county. So for San Mateo County, again, we have this chart that going all the way back to June 1991 to July 2020. And you can see the same trend that we had in San Francisco, because basically we are more or less the same market. From 1991, less than like is less than 400,000. Right now is over close to 1.7 as of July 31st. This is talking about a single family house. So here, this one is right now what are in the market right now, the active listings. So basically, right now that our seasonal has pushed instead of the spring as a peak season. Now it seems like summer is our peak for this particular year because of the pandemic. But we are on, even though because we push off for 2 months, but our trend is still the same as the pre-pandemic years, like 2019, 18, or 17 even. The trend is still like going the same way as it is. So the next one is the, it's combined, is the closing. So again, this is the, you can tell that we, even though we had the pandemic during those 2 months, we are in the situation that is better than the pandemic, pre-pandemic level and the time. You can see like back in October, the level is right about 500. Right now is over 550 already for the closing, number of closing. So here are the few of the luxury home statistics for $3+ million home in the signature cities in the county, like Atherton, Burlingame, Hillsborough, Menlo Park, Portola Valley, Redwood City, San Carlos, San Mateo City, Woodside. So you can see the median sales price and their medium dollar price per square footage. And this is the current pricing that you can find in these cities in San Mateo County. So for this one is talking about the condo market. San Mateo County in average has more single family house than condo. So you can see that right now the average pricing is, because of that as well, is lower than San Francisco. But however, the trend is still the same as San Francisco, that we have a very stable pricing, even though during the pandemic, this 5 months of shelter-in-place living condition, right now is even above the average pricing before pandemic. Sorry. So this one is the for single family home. Again, is we are on the great trend that still keep kind of edging up and above the pre-pandemic average median price as well. So this is the sales absorption, and this 5 months pretty stable, and we are seeing that is pretty except the beginning of the shelter in place. Otherwise, San Mateo County has been doing pretty well in terms of the sales absorption. And this is the overall price per square footage, including single family house and also the condo. So now next is the Santa Clara County. Again, we have a chart that from this one is January 1991 to January 2020. So again, the same thing is like we have the same trend of what we had seen before, what we have seen in San Francisco and San Mateo County. Our recovery is great, and now we are at the other closer to the peak that recorded in January 2019. So right now we have pretty healthy active listings on the market, even though it is still during the pandemic, shelter in place. The inventory is lower than the normal previous years, but however, we are more than what we had seen in 2017. So here is the sales volume by month, starting from January 2017 to all the way to July 2020. So this chart, you can see that we are typically having supposed to be in the peak during the May. Now we push it to July 2 months later. So even for these 2 months, like April and May, there were still some activities going on, and then we pick up dramatically starting in June and July. And I've been hearing even this month, August, I wouldn't be surprised that when we see a report in September about August sales, I would see the trend is still going up. So here is the percentage of listings accepting offers starting from January 2019 to July 20th. So again, this is the winter time, December and January always had, we can see a dip there. But however, this is supposed to keep going up. However, because of the shelter in place pandemic, we got hit hard during those 2 months, but quickly we jumped back up, and now even better than before the pandemic, or even better than 2019. Here are the few cities in Santa Clara with $3+ million median price. And we have Cupertino, Los Altos Hills, and so forth. And this median home pricing reflects the overall city, that particular city, what they are standing at. So for this one is a condominium in Santa Clara County. Of course, again, Santa Clara County is a big county, and they have a lot of land, and also majority are still single-family homes, and they do have some condos, and the average pricing, which include brand new and resales, the older ones, are pretty stable, even going through this past 5 months of shelter in place. And this one is single family homes. Again, same thing, is they're still staying very strong with the price over almost $1,400 per square footage. Here is the sales absorption. So again, the same thing, when we start the shelter in place, the activities tumbled, and then now it's kind of like going pretty stable and up and down, but within 2%, which is very normal, even in a peak season. So this is a percentage under contract for a single family house, which is like almost like every one of 5 properties on the market is in contract right now. So this is the condominium last 6 months, what's going on for sale, how many are on the market. And right now it's about 474 as of August 16. This is the single family homes listing. Of course, a lot more, because they have a lot more single family homes down in Santa Clara County. So now let's talk about Alameda County, our East Bay. So again, we have the from January 1991 to July 2020. Again, the same kind of trend that we've seen with the other 3 counties, that we are still in the so-called recovery, but it's not actually. We are heading to another record-breaking median house pricing in Alameda County as well. So this is the median condo sales price from January to July year to year. So 2020 against 2019, you can see that the lighter color is 2019, the red is 2020. So yes, we did get some drop in May and June. However, we start picking up quickly, and even in April we went up more than last year too. So the market is still pretty strong in Oakland. I think people think some people, I heard that they moved out from San Francisco to East Bay, including Oakland, to have a bigger unit, or to even to the further suburban area. So here is the median house sales price per, by month, same period, and now the single family house exceed last year for more than 100,000. So, which is a very exceptional performance. So here is the detached single family homes medium sales price. Again, during this 6 months of time, or 5.5 months, we're pretty stable. We didn't see a big drop of the pricing or big spike of the pricing. So of course, I don't expect it would be a big high skyrocket, but being stable is very impressive. So this is again, this is the medium price sold in the past 5.5 months, and again, it's pretty stable and even exceed the pre-pandemic level. And the sales absorption, again, this including single-family house, condo, townhomes, loft, or 2 units. So again, it's about every 5 properties, 1 is in escrow. And this is the weekly, if is the for sale right now, number of properties are on the market. So we went up from, we were down from 1,200, around 1,200, now back to more normal numbers is around 1,800. All right, so I had gone through the major few counties in the Bay Area. So I'd like to take a little pause here and see if anyone has any question that I can answer.
Yeah, Angela, actually, yes, I have some question here. So the first question is, do you see the pandemic setting? So is this a longer trend or just a short-term reaction that people moving out from San Francisco to move to suburb area? What do you see about that?
Yeah, the trend is happening, but however, it's hard to say it's a temporary or a permanent move, because when back in the 2000, around 2000, the dot-com bubble, at that time, 2000 and 2001, a lot of people moved out from San Francisco to suburban area, or even moved out of state. However, within 1 or 2 years, they all came back. And not only that, more people came back to the Bay Area or moved to the Bay Area from other states. So I hope this this time will be more or less the same. Is a temporary trend that people would like to move out from the urban area to a more suburban area, or I've heard that some people are moving back to their parents in Midwest and so forth. But one thing is, this time the companies, more companies are they allow their employees to work from home. So we'll see how it goes, but I think that the trend and I hope that will be the case, is will be like a temporary. Once the pandemic is over, people start uh, getting back to their normal life, then I think the business will start getting back to their full speed. Then I think we'll see more people moving back into the city or in the Bay Area.
Okay, thank you. Because
Yeah.
one thing that I see San Francisco and Hong Kong have a lot of similarity. One character is in San Francisco doesn't have enough land to make a to build or to make a single family home. So that's why it always has a demand there. So other thing is I have a question. Actually, one of the participant has a question is regarding the investor. So would there have been an investor, maybe from Hong Kong or Asia, that they have moving the capital to the U.S. due to the current situation in Asia or in Hong Kong? Because people is talking about immigration now.
Yeah, well, it always have a trend. I have a few slides to share with everyone before the end of this presentation. Is about foreign investors. So I can talk a little bit about that now, especially talking about Hong Kong. Yes, I've heard that more investors from Hong Kong are looking into investing real estate properties in San Francisco and Bay Area. I've seen that, and that's one of the reasons why I'm setting up a JB brokerage firm there as well. So I think this is a trend, but I haven't seen like a lot, like suddenly is like a flood of investment funds coming in. But I've seen starting seeing more and more.
Yeah, because I know that people from Hong Kong or from Asia, they love to buy property.
Oh yeah.
So yeah, I don't think that is it just like suddenly, it's just like people is keep on going to buying property. So okay, other question is in your presentation you're talking about this is some slide talk about the sales absorption. So what is that? Can you mention more about that?
So self-absorption means like basically is how many properties on the market and how many are in escrow. So if the sales absorption is high, that means the market is really hot. It's a seller's market. But however, it depends on the inventory as well. Because right now we are running into low inventory in overall the Bay Area, and except San Francisco condo market. Otherwise, you can see it's quite in proportion. It the right now is the sales absorption is kind of getting back to normal, but it's still working on it. It's not quite normal yet, but we are on the right track.
Okay, so talking about the condominium market. So the next question is about condominium market for San Francisco and Peninsula. So you know, in those condominium market in San Francisco and Mid Peninsula, it kind of weak the trend, the pricing due to pandemic. Do you see that it will be a quick recovery or take slow recovery after the pandemic? And then
Well,
also, is this a good buy to buy now since the pricing is so soft?
yes. Okay. Yes, I think the condo market. I don't think it will come back this year. So I think once the pandemic is over, as I said, everybody starts coming back to the city, starts working more normal in a more normal way. I think the market will start picking up because San Francisco is still San Francisco. We have a lot of big companies here, and we do have great employers, and it's a metropolitan, so it still attract people from not only local Bay Area and also out of state and even the world. So I think the market will come back. Actually, I did recommend some of my clients that maybe it's a good time to look at the condo market, because right now it seems like is softer now, and maybe it's a good time to see if you can find something that you like and invest in.
Yeah. So Angela, what do you see the demand on the rental market now? Because I know people don't buy for the primary home. They do some investing on the housing. What do you see the demand on the rental
Well,
market?
yeah, the rental market, I think if you don't mind, I would like to table this question, because I will cover that with a few statistics and data that I'd like to share with everyone. And then at that time, maybe I can come back to this question, and probably my information will already answer the question.
Okay, great. So far, I don't have any question in the chat room.
Okay.
So
So
yeah, you can take it away.
okay, let's move on to mortgage interest rate trends. So this is what we have is the trend that since November 2018. So you can see the 15-year fixed rate and, 30-year fixed rate. Right now, we are at almost close to all-time lows for both a 30-year mortgage and 15-year mortgage. So back in November 2018, you can see it was like at 4.94%. And even back in 2007, which was before the last recession, it was at 6.3. So one of the reasons why we have such a great real estate blooming trend right now going on is because of the help of this low mortgage interest rate. So the next slide, we can see from 1981 to 2020. So you can see the interest rate trends. From back in 1981, it was like over 16%. If you want to buy a house, you had to pay around 16% interest rate. But now, if you want to buy a house or buy a property for your own use, it's less than 3%. I mean, it's such an amazing rate. So that's why people right now is say, why not? If we live in a small property, a small house, might as well, yeah. Instead of refinance the existing mortgage, why don't we just buy a bigger house, take advantage of a low mortgage rate? So that's what's happening right now. So now we talk about demand and supply. So here are all the Bay Area counties, what's going on right now in different market. So you can see that we have Solano, we have all the nearby all the way up to Solano County. All of them, they have the word hot, hotter, either with different adjective, very much, substantially, extremely, or slightly. The only city that is not having that word is San Francisco. So San Francisco housing market is pretty stable. However, for the condo is much cooler right now. So you can see the median house sales price in Q2 2020. Those are the current median home price in average. So now we talk about foreign home buyers. So a National Association of Realtors, we have done the statistics and collect the data, mainly for the 4 countries. Those are the top 4 that most foreigners would like to invest in the US. So of course, China is number 1, Canada, India, Mexico. And then actually the 5th and the 6th are UK and European. So for China, you can see from since 2017 to 2020, they declined their investment in the US for 64%, Canada, India as well. So, however, when you look at that, okay, well, that means they are not buying any as many properties as before. However, our housing pricing in the United States, we didn't drop at all. It's not because we have been going up, even though with less international buyers involved in our real estate market. So, which is a good news. To my interpretation, this is where that means that our local market is very strong. We are not relying on foreign investor or foreign money to support our real estate market. So this is a very healthy way to look at it. And according to the data, the real estate market, the percentage of foreign buyers is only about 3.5%. So 96.5% are local buyer. So here is the number of transactions as well. So from the China back in 2013 all the way to 2020, you can see they are like kind of going up and then back down. And right now, I think is the lowest trend since we did the record, did the back in 2013, have this data collect. And here is the where they would like to buy. So Florida is number one choice to a lot of Canadian and Mexican, and California is the second. So California attracts more of the Chinese buyers, Indian buyers, and Canadian as well. Mexican, because it's kind of mixed, but more Chinese buyers, and Texas, New York, and New Jersey. And New Jersey comes to the fifth. All right, so now is back to our local affordability, how much we can afford. So this is a very interesting chart that I'd like to share with you. So you can see San Francisco still in Q2 2020 is still the highest median house sales price county. Oh, sorry. Okay, sorry. So it's 1.71 million. And the second is San Mateo, and then Marine, and all the way. And then United States average median house price is only 291,300. So the reason now we can see, okay, why San Francisco kind of cooled down a little bit and still holding as the number one highest median house price in the Bay Area, because it has been very high. And even this 1.71 million, it was up from 1.65 from the first quarter. So even though it's kind of cooled down, the market's been cooling down, but the price is not going down as much as the sales absorption. So here is the minimum qualifying income required to purchase. This is just a statistic, and is including the tax and insurance. So for San Francisco, it's still number one. You have to make like $322,000 in order for you to qualify to purchase a median sales price to house. And then in the United States, it's only 54,800. And you can see the whole Bay Area, they are all 6 digits except Solano, but Solano is already close to 100,000 anyway, it's 91,200. So that's the reason, another reason why we have a high housing prices as well. So the median household income here is, San Francisco is not the highest. Rather, Santa Clara, I think, is because of all the high-tech companies there. And but we are pretty close to each other as well. The top four is all over 100,000. But this is just the median. That means it's the kind of the middle income. Of course, some making a lot more and some making a lot less. So here is the all the counties annual median house sales price from 1990 to all the way to 2019. So San Francisco and San Mateo is up here, and there's still the trend. San Francisco is at that time was still going up, and you can see at that time was only 1.6, and now we are at 1.71, which is less than a year. All right, so now we are touching the San Francisco rental market. So we look at how many apartments are in the pipeline coming up. San Jose has the most, Boston and so forth. San Francisco rather is dropping. New York is dropping as well. All right, so according to the latest San Francisco Apartment Association survey, since the pandemic, we have 14.3% tenants have broken their leases. 42.7% of the landlords have received requests for rent reductions. And among those requests, 34.7% of the landlords have granted a request for either a permanent or temporary reduction of the rents. So latest Zero report, inventory of available rent apartments up 90%, over 90% over the year ago. And landlords have been, I've been seeing landlords cutting rent by 10 to 20%. So it depends on the location. Some location, I've seen like only cutting 7 to 8% the most, but some are like up to 20%, and then plus some concessions as well, including gift cards to the tenants, and then or months of free rent. So overall market vacancy rate right now is about 4 times of what it was prior to pandemic, but the pre-pandemic level was really low. So right now it's about 11%. It's about 11% vacancy, but it was like about 2% before. 2.5%. So according to Zumber, the average rent's down about 11%. And unfortunately, the high-rise buildings impacted the most. The reason why, one of the reasons is because people right now is kind of scared of being too close to each other. So they don't like to spend too much time or being in the same room with other strangers, like in a common area, like a residence lounge or the gym and so forth. So the high-rise buildings are less attractive than before. And that's why they got hit hard the most. So talking about the new developments, quickly to go through right now is because of the pandemic, the constructions got delayed quite a bit. Nearly all contractors have been impacted by the project delays, and 73% expect those delays will continue into the fall until the end of this year. So there are some changes need to be made in response to COVID. So we have to maintain the social distancing, modify work delivery schedules, and also we have to adjust the salaries and pay the furlough and lay off some employees, which are very unfortunate. So in the future, we will have to probably imply this extra safety protocol in the area. And in this industry, so which is good. I think is good to everyone. So, however, the builders' confidence in July is at all-time high as well. For newly built single-family homes, it's jumped 14 points to 72 in July. And housing starts rose 22.6%. Single-family starts rose 8.2%. Multifamily starts rose 58.4%. Building permits rose 18.8%. So you can see builders' confidence is a very good is a good how to say is the indicator to tell you what builders or developers are thinking. Because if the builders and developers think that if they think that the market is not going to be well, and then they don't have confidence in the economy, they are not going to start building. They wouldn't start their construction at all. They would delay until they can see some light at the end of the tunnel. But however, the builders' confidence in July jumped so much that they think that we are on the right track, that we coming out from the pandemic recession pretty soon, because normally the construction will last like a year to 18 months in average. So by the time they complete the construction, we will be hitting the peak market again. That's what they look at, how they predict the market. So now this is the end of the presentation. I think we are, I'm open for any other questions or answers, and let me know if I answer the question regarding the rental. If not, then I'm happy to elaborate more.
Yeah.
Just let me know.
Yeah, thank you, Angela. It's very informative and make me learn more about the Bay Area housing market. I want to confirm, so the presentation, you will able to send it to our participant?
Yes, I can share all the slides with anyone who is interested in having the slides. So just let Corey know, right?
Yeah.
Angela. So if any audience reach out to me, I'll let you know. Then we will share the slides, and they can connect with you personally if they would like to. And also after the webinar, I will be upload today's webinar recording and also the slides on our website, which is www.hkanc.com. So let's get back to the Q&A question. Q&A section. Do we have any other questions from the audience, Corey?
So far, I don't. And also because I wish I have more time to present the question, but I think that is the time to back to you, Yanni.
All right, thank you so much, Corey. And also thank you for the great presentation, Angela. Before we close today's webinar, I would like to announce our upcoming events. Let me just pull up the flyers real quick. So, just like exactly 2 weeks after, we're going to host our first virtual mixer. We'll be in partnership with the Hong Kong Association of Southern California. And this will be our first virtual mixer with our board members and also the other members. So if you have time, you can check out our website and you can do the registrations there. But please note that this event is exclusive to our member and also the members from the Hong Kong Association Southern California. For this event, if you have any friends or you know anybody may want to join our association, then they will be eligible to claim this new members only offer. So for the Hong Kong ANC new members, we will give out a complimentary wine pairing for you to enjoy during the virtual mixer section. And for the new members to the Hong Kong ASC, then they're located in LA. You want to sign it up if you're located in the Southern California, of course, and that you can get a complimentary gift box of the crystal and also the LED lights. for more information about the memberships and the benefits, you can go to our website and also the website of the Hong Kong Association of Southern California. And then on the right-hand side, you will see all of our board members will be attending. So it will be an excellent opportunity if you want to meet our board directors and also just make some new friends and then expand your professional network. So let's see, if you don't have any other questions, if we don't have any other questions from the audience, then that will be the end of the webinar today. And once again, thank you so much for your participation. And thank you, Corey, and thank you, Angela. I'm very excited to meet you again at the virtual mixer in September.
Thank you. Thanks for having me. Thank you, everyone.
Thank
Take
you.
care.
So
Thank you.
have a good afternoon. Goodbye. We'll see you.
Bye-bye.